Tesla stock today is down about 2.5%. And believe me when I tell you, you're going to laugh at the reasoning why Tesla is underperforming today. Now, we're going to go ahead and start with this quote unquote negative news. It's very easy to understand and explain. It's literally laughable. But we do have some big news today as well with the Fed. Fed Barkin had a lot of big statements earlier in the trading day today that did cause Treasury yields to fall. We did get an ADP employment report that came in better than expected, and ISM manufacturing data that came in weaker than expected, especially prices paid, which is your inflationary component of that index. We will cover all of that and much more here in this video. But first, I want to start with all of your Tesla stock news today, what the option activity looks like and all of it. And let me just tell you, option activity today is actually pretty positive. 72 different trades totaling $33 million with a positive order value of 69%. This does not appear to be a mass panic or exodus of Tesla stock, despite the headline that I'm going to show you next. Volume on the day today is 57.72% calls and 42.2% puts, which again is a pretty healthy number. So here is the scary headline today. Quote, Tesla sees German car sales plunge in January. Tesla sold almost 60% fewer cars in Germany in January than in the year earlier period as the US electric vehicle maker faces a test of popularity amid headline-grabbing political involvement by its billionaire CEO Elon Musk. Of course it's going to be Reuters that paints this in this picture. It does go on to say that newly registered Tesla cars fell 59.5% to 1,277 in January, while the overall German market was down just 2.8%, at slightly more than 207,000 vehicles during the month. Take a listen to this. If the headline, couldn't get much worse, well, you're wrong. The overall segment of battery electric vehicles where Tesla is competing, however, gained popularity in January with sales up 53.5% and almost 34,500 vehicles across all brands. Car registration data in Sweden and Norway earlier this week also showed that Tesla lost market share there in January. A total of 405 new Teslas were registered in Sweden last month, down 44% from January of 2024, while registrations in Norway fell 689, a decline of 38% over the same period, despite soaring overall demand for cars in the two countries. The reason why this is laughable is because the context is like second grade comprehension levels here. Why are Tesla sales, quote unquote, plummeting? I mean, do I really got to spell it out for Reuters? Tesla has retooled their factories in January to start production of the new Model Y. They are producing less vehicles. They are currently not producing the new Model Y, or at least we're not delivering that yet. So what happens in a factory setting is you don't go from one day mass production of one vehicle to the next day mass production of a new vehicle on the same manufacturing lines. No, there's a couple weeks where you wind down production of the prior vehicle, in this case would be the older Model Y, and you start, getting things retooled for the new Model Y. This headline is complete bullshit. Just let's be honest. What are the odds that I'm wrong here? And in Germany, in Norway, in Sweden, Sweden and Norway, these are some of the highest penetration areas of electric vehicles. I believe Norway's market share of electric vehicles is like 80+%. What are the odds that Tesla, the number one best-selling car, the Model Y, and the number two best-selling EV car last year, the Model 3, are just all of a sudden not popular or selling in these countries anymore that have very high take rates and adoption rates of EVs. The odds of that are not very good. Okay, so Reuters always likes to come out with these hit pieces against Elon Musk and against Tesla. This is complete bullshit. They are retooling factories for the new Model Y. And out of all of the Reuters hit pieces, I think this is the least, well put together. I mean, this one is so easy to argue. It's like, again, second grade comprehension levels that are lacking at Reuters. So as for Tesla's 2.5% fall today, of course, the algorithms here, 60% decline in vehicle sales and 30% and 40% in many different European countries. And they start selling Tesla stock, algorithmically speaking. But this will be an opportunity. Mark my words on that. Obviously, I am not a financial advisor. I am not a financial planner. Perhaps everyone in Europe just said, oh yeah, we don't want Teslas anymore. We don't want the best car with the best tech. We're done with Tesla. Maybe that did happen. But the odds of that, I think, are very low. So not a financial recommendation. Do not buy, sell, trade anything that we talk about here on this channel without doing your own research and or contacting a financial advisor. If you have questions, if you're confused, if you just need general help in your investing journey. But again, mark my words, I think personally, this is a big overreaction. And when typically you get big overreactions, you do tend to see big reversals in the other direction. In other AI news today, Figure's CEO says, quote, Figure made a major breakthrough on fully end-to-end robot AI, built entirely in-house. We're excited to show you in the next 30 days something no one has ever seen on a humanoid. That's exciting, because that's the same approach that Tesla is taking. If they did make a breakthrough, then it's kind of like Waymo, right? It doesn't matter who's necessarily first. As Elon has said before, really, manufacturing can be the death of a company. If you're not good at manufacturing, it really doesn't matter what kind of product you have. Like Rivian. People like Rivians. Rivians are good products. But they do not have manufacturing down, and that's why they continue to lose billions of dollars per quarter. So I would go out on a limb and say this is also positive for Tesla. Again, just showing end-to-end AI training, not just code, is the way of the future for humanoid robots, and it also helps to validate FSD for anyone that does not think end-to-end will ultimately be unsupervised. And in a new research report that ARK Invest put out yesterday, Tesla's cost per mile is 30 to 40% lower than Waymo's for a robotaxi network, and a lot of this has to do with Tesla doesn't need to run the expensive sensors, and I mean, a Waymo vehicle is like $250,000 fully equipped. So yeah, that definitely takes some of the cost away. ARK Invest says after more than a decade, most automakers have dropped out of the autonomy race. Tesla and Waymo remain, and again, there's really not much competition, if you will, for Tesla. And there's really not a lot of competition for Tesla in the sense of end-to-end, without LiDAR, mass market, without having to map out different areas of different cities within the US and the world. I mean, how long is it going to take for Waymo to be available in every city in the US? That probably will not happen in our lifetime, just to be honest with you. Like, if you're in a rural area, if you're not a big city, you will probably never have Waymo access. How large is that total addressable market? It's big, but it's going to take a long time to fully reach that. If Tesla can launch unsupervised FSD anywhere with a robotaxi network, I mean, that's probably going to put Waymo out of business. And ARK Invest suggests that Wright's law suggests that a $15,000 robotaxi is possible. Mercedes has gained Tesla supercharger access in the US. Canada is coming later this year. Delaware's governor is weighing changes to the way business disputes are handled in the state to improve the system. Possible changes are based on feedback from executives, corporate lawyers, and people suing in the Chancery Court. And apparently, Nissan is planning to reject Honda's merger terms. In recent days, Honda presented a new proposal that would have made Nissan a subsidiary of Honda instead of the more equal structure originally planned. And officially, the old Model Y has been removed from Tesla's China website. Tesla's brand new Megapack factory in Shanghai will officially start mass production on February 11th. Tesla says it plans to hold a ceremony on the morning of February 11th. This factory will generate an estimated $8 to $10 billion in annual revenue. Assuming we hit the 10 billion mark, that's going to add about 10% to Tesla's revenue, which could bring in around $2 to $2.5 billion of bottom line profitability for Tesla. That would be, I mean, if you consider the, let's call it 2.5 billion, because Tesla tends to do great things, divided by 3.3 billion shares outstanding, that could add about 75 cents to Tesla's EPS this year if this factory is fully executed on. I mean, it's not nothing. That's actually quite impactful. At 120 times multiple where we are at today, that adds almost $91 per share to Tesla's share price. And especially considering Tesla stock is now down over $100 from the all-time high of $488 per share, I think Wall Street's really starting to lose focus on the good things that are happening this year for Tesla. Like, again, FSD launching in China. That's going to be materially impactful for Tesla's bottom line. The new Megapack factory, as we just explained. Cheaper, lower priced Teslas coming. Still, first half of this year. Okay, FSD potentially in Europe this year. I think that's also a big deal. Tesla Semi-Factory is going to start production. Tesla is going to start production of Optimus bots this year for use internally, of course, which will help reduce headcount costs and ultimately make Tesla more profitable. Like, these are all huge things. I didn't even mention the robotaxi network that's coming here in June. I think investors and algorithms mainly have lost focus and really have grown disconnected from what Tesla is doing. And I think that presents an opportunity for Tesla stock to re-rate again back to the upside. Elon Musk is set to meet Indian Prime Minister Narendra Modi during his visit to the US in about a week. Discussions are expected to focus on Tesla's expansion and collaboration with ISRO with an eye on the growing electric vehicle market. Also in the news today, Tesla China is offering insurance subsidies of 8,000 won, about $1,103 US for all Model 3 buyers. Ford's next generation F-150 EV production target has been pared back by 67% with a planned start of production date of 2027. South Carolina lawmakers are considering a new bill that would finally allow direct-to-consumer electric vehicle sales. And this could actually be a pretty big deal if some of this legality starts to be walked back, because right now, Tesla can only put their service centers really on like Indian grounds. So that's why they're far and few between. For Tesla to be able to open more, probably at lower price points, would be, I think, beneficial for growing sales in the US. Now, we also have big news today from Fed Barkin. Fed Barkin says it's difficult to know the impact of tariffs, but the latest Fed dot plot showed they would be 100% positively, definitively inflationary. That is obviously commentary from Zero Hedge here. That is not what Fed Barkin said. And he's basically pointing out that now the Fed is starting to kind of flip-flop from the last dot plot where apparently all Fed members agreed that tariffs would be inflationary, to now the Fed saying, well, it's difficult to know the impacts of tariffs. Barkin confirms that he is still leaning towards cuts this year in 2025, and he says he would never take any policy move off the table, but hikes would require an economy that is overheating, which is clearly not what is happening in the economy right now. This morning, we did get the ADP employment change for January that showed 183,000 job ads, well above the expectation for 150,000 job ads. So that is good, a good sign for the labor market and potentially for the economy. But if we take a look at ISM services PMIs, we were expecting actually month-over-month numbers to go up across the board. And that just did not happen. The headline number came in at 52.8 versus expectations of 54.3. It's not too often that we have services actually miss. So, that's kind of different and a sign that the economy broadly may be weakening. And considering services are about 80%, 75-80% of the economy versus manufacturing being the rest, services data just holds a lot more weight than manufacturing does these days. Now, ISM services business activity comes in at 54.5 versus expectations of 58.1. So that's like a plummet, okay, in business activity. Now, numbers below 50 are negative or contractionary, so you're not there yet. But headline ISM services is pretty close, which is some of the weakest numbers we have seen in a while. Now, employment came in at 52.3 versus expectations of 51.3, so that's a little higher, not necessarily a bad thing. ISM services new orders came in at 51.3 versus expectations of 54.1. So that kind of plummeted. New orders is almost negative. Not really a great sign for the services side of the economy, which again is most of the economy. And ISM services prices came down to 60.4. Last month they were at 64.4 versus expectations of 64.8. So services prices really plummeted, and that is what helped cause the rally in bonds today. You guys can see 10-year treasury yields are down about 10 basis points to 4.41%. We're finally below that 4.5% threshold, and a lot of this has to do with the services prices paid that came in lower than expected. I mean, a 10 basis point move lower in 10-year treasury yields is a big deal. So basically what this means is investors are going out and they're buying the bonds. Odds of a Fed rate cut or a couple Fed rate cuts this year are rising. You guys can see here, Fed rate monitor tool shows a 16% probability of a Fed rate cut March 19th, but you're really pushing up the odds of rate cuts. One by June, it's almost a guarantee now. By June, you'll have a rate cut, but there's also a 20% chance of 2 rate cuts by June. May 7th, there's a 36.3% chance of a rate cut. So this was actually very positive news for the broader market today. ISM services data was not that good. Now, tomorrow we're going to have some data coming out, a little bit of a slower day. On Friday, it's the big data with non-farm payrolls and the unemployment rate and Michigan consumer sentiment. Now, Fed Barkin also had other positive things to say as well. Fed Barkin says, I expect 12-month inflation numbers to come down nicely in Q1. He also says there is no evidence of overheating at this point. He says he still thinks the policy rate is modestly restrictive and have recalibrated to a place that is more sensible to where the economy is now, and the bias is to see what happens and react to it. And now dairy cattle have tested positive for bird flu strain not previously seen in cows, U.S. Department of Agriculture says in email seen by Reuters. And via the World Trade Organization, China has initiated a WTO dispute complaint regarding U.S. tariff measures. China did to some degree strike back recently, imposing 15% tariffs on coal and on LNG imports to China, and I believe 10% on crude oil imports. It might be 25% for coal and LNG. I don't think the numbers matter all too much because oil is a global commoditized product. So is coal and so is LNG. Overall, when China did put these tariffs on, it caused a slight reaction in overnight trading, and then markets just resumed higher the next day. It wasn't as dramatic as Mexico and Canada, at least for our markets. You can also see that crude oil inventory numbers came in at positive 8.664 million barrels last week, where we were only expecting positive 1.3 million barrels last week. So people are really starting to drill. That is one reason why oil today is down about 2%, and the more oil falls, the less pressure on inflation we are going to have, the less of an impetus it will be for the Fed to keep rates higher, especially as you get more progress on inflation in the coming months. I think it's going to be obvious that the Fed is really going to need to start aggressively cutting rates. You can see in the broader markets, Russell 2000 is the outperformer today, up almost 1%. The NASDAQ is the underperformer, actually red, down 0.05%. S&P is up 0.14%. The Dow is up a third of 1%. The VIX is absolutely collapsing today, down 6.3%. And again, some of that has to do with 10-year Treasury yields also falling 10 basis points. It makes sense why the VIX is down so much and the Russell is up a lot. CNN's Fear and Greed Index today is sitting at 39, so showing a lot of fear still in markets, which, I look at this as a purely contrarian indicator. When this thing is in fear, I think you should be more bullish. When this thing is in greed or extreme greed, it's time to be a little bit more defensive, okay? As long as this thing is in fear or neutral, history would tell you want to be bullish on markets. Market momentum is fear. Stock price strength, extreme fear. Stock price breadth is fear. Put and call options neutral. Market volatility is neutral. Safe haven demand in fear. And junk bond demand is neutral. Same is generally true for the percent of stocks trading above their 50-day moving average. You're up 3.61% today to about 51% of stocks trading above their 50-day moving average. But still, almost half of stocks are below their 50-day moving average. You don't really start to get overextended or so until you're like 75 to 80% of stocks above their 50-day moving average. You're really not even close to that at this point. And we will be getting a new AI investor sentiment survey that will be coming out tomorrow. Last reading was 41% bullish, 25% neutral, and 34% bearish, which is pretty much within historical ranges. Besides, the bears are a little high and the neutral investors are a little low. We did get a new Atlanta Fed GDP Now update today, since we did get exports and import data. And now we're sitting at a 2.9% GDP estimate, which is falling back closer to where the blue chip consensus estimate is, around 2.3% or so, after almost being at 4% for the initial read for Q1 2025 GDP. Now, again, specifically for Tesla stock, even in the time of recording this video, option activity has even gotten more bullish now. You've seen 83 different trades totaling $43 million with a positive order value of 73%. That's pretty damn good. Volume today, 58.09% calls, 41.91% puts. Like on a day where Tesla's down now almost 3%, yeah, that's pretty good. And today you really don't have any net change in shorts or shares being covered. You got technically about 21,000 shares on net that are being sold short today, but there's not a huge shorting pressure on the day today. 2.26% short interest of free float, $24.8 billion sold short in Tesla, totaling about 63.23 million shares that are currently sold short. Sentiment for Tesla today is extremely bearish, coming in at 21. Typically, when sentiment is really bearish, it's a good time to buy. Obviously not a guarantee, not a recommendation, but normally when sentiment is this bad, you probably want to buy a little bit. Okay, message volume is high at 69 today, unchanged from yesterday. Participation ratio is coming in extremely low at 11. So it does seem like people are pretty down in the dumps right now in Tesla stock. And from a technical perspective, we all know Tesla trades, on the technicals pretty much on the dot. You really want to watch this line right here, this support line I have drawn from support that we've seen on December 6th. We found support 1, 2, 3, essentially 4, 5 days of trading since then, right around this line. So if we stay above there, not much has changed. Okay, that's good. If we break below that, then you're targeting your 100-day moving average at about $330 per share. Could that happen? Of course. Is it impossible? Of course not. But I think you're going to need to get some materially bad news to get the stock to fall to those levels. You need a broader market kind of correction. You need something bad to happen with Tesla to get more downside from there. That would effectively put the stock down about $150 per share from its all-time high. I just don't see that really happening unless we get some bad Tesla specific news. Now to the upside, you want to break your major moving averages and or this downtrending line. You're looking at your 50-day moving average at about $401. That's a level to break out above to the upside, and your 20-day moving average at about $403 per share. You break out above any of those moving averages, you're probably going to break above this downtrending trend line as well. You get above that, and that opens the door for a lot more upside. So right now, really question is, can we hold above 374? If we can, then nothing really changes until you break above the moving averages to the upside. If you break below 374, then you're in more of a dangerous position for Tesla. But really, I will tell you, this move lower today, I think is unfounded. Right? Yeah, the headlines look scary. The algorithms are reacting to it. But it doesn't make a whole lot of sense because anyone with like a, again, second grade comprehension level can understand Tesla's retooling their factories to start production of the new Model Y. They're not full force cranking out the old Model Y. They're taking pre-orders for the new Model Y right now. So they can crank their factories at max capacity to produce the new Model Ys. Like the whole headline today just doesn't make a whole lot of sense. That's my take on it. Let me know what you guys think down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.